There was a mixed bag in the markets on this holiday shortened week. Biden's big week saw big tech stocks soar along with gains in gold and bonds. Oil was a bit slippery and Bitcoin got whacked. And right on cue for Trump. Hospitalizations and deaths from coronavirus improved dramatically. In other news, as you know, I had about three-quarters of my investments in tech stocks. I also had sold calls in those stocks over the past few years several times. But last Friday, the options expired and all of my tech stocks were called away. Don't worry, as I made lots of money over the years on both the option premiums and the stock appreciation, so I'm not sad for them to go. And now, as you can see in this picture here, I'm going to be very, very patient, like I tell you, and wait for some profitable opportunities. When they come up, you will be the first to know. So, how are the charts? Well, let's take a look. But first, since the start of 2021, Bloomberg has reported that company executives sold $300 million worth of stock shares through last Friday, and that is 16 times the total they purchased during the same period. And as one would suspect, those same company executives have authorized their companies to buy back $29 billion worth of stock, which is up 46% from a year earlier. And these actions warrant caution on the part of investors. As an investor, you want to always make sure your objective is in line with management. As an investor, you want management to feel that the company is valuable and that it will continue to grow. But when the message from management is that, hey, it's a good time to sell, then you better take note. Too often, the message from management is to do as I say, not as I do. Just go ahead and keep buying my stock while I sell. Perhaps it's time to do as they do. Okay, let's now go take a look at the charts. And we're now looking at the 1-year daily on the Spiders, the SPY, and the close on Friday was 382.88. Now, we're looking for two things here. It's pretty simple. First of all, we have this channel line moving up there, and then the upper channel line moving through here. Not a straight line, but you get the idea. Basically, the stock has been moving through this channel, getting reflected up here and then down at the bottom. So it's moving on through here. We want to watch for a breakout or a breakdown. Let's go back to, say, this channel here. Same thing. Let me see if I can draw some straight lines this time. Not real good, but you get the idea. This was a breakout, and then it topped, and then it broke down. We had a small channel in this area here, real tight. But as you can see, it broke out up to that point, and then broke down. Back here is another slight melt up through there, like that. And it broke up, topped, and then it broke down. So what happens is these breakouts are false breakouts, and you chase it and you get stuck. So don't chase this move in here. Just watch out for that breakup and the breakdown. Sometimes it can just simply break down through the bottom trend line, and that's equally dangerous. But that's what I'm waiting for. I'm not using my money. I'm not going to chase this market here. And if I have to wait a few months, so be it. Don't do it. The upside risk is not worth the downside risk. There's very little potential in the upside, at least in my opinion. So for today, that's ChewDog Charts. Thank you.